With the year winding down, investors are crunching numbers to see how their stock picks for the past year have performed, and they're already making their picks for 2014. Joining us to discuss where value can be found is Alwyn van der Merwe. He's Director of Investments at Sanlam Private Investments. Well, you've got a handful of stocks, 5 to be exact, Alwyn. Let's start off with Kumba. Good news with the Constitutional Court finding in Kumba's favour. So that story with the Guptas is now off the table. And I guess it's they can start jacking up their production.
Yes, I think that is probably the major concern. If you look at the latest numbers, the production numbers were slightly disappointing. But then if you look at the new mine, the Kumba mine, the production was slightly better than expected. However, Alec, if you look at Kumba, ultimately it is the Kumba share price is very dependent on the iron ore price. And I think if you look at the iron ore price at the moment, it is about $133 a ton. The iron ore price is slightly better than what most people expected. So in our view, the shorter term earnings, and remember these stocks, we pick on a slightly shorter term investment horizon. The shorter term earnings we think are likely to surprise the market, and that is why we've included it in our portfolio. You would have seen yesterday also, they came out with a trading update, and they said that for the full year, the headline earnings per share or the earnings per share will be up by about 20%, which is roughly in line with what the market expected. But I think it's still a pretty decent number. And we also saw a very strong response in the share price itself when it went up by more than 7% yesterday.
Alwyn, it's Gugu here. You've also included Sun International as one of your stock picks for 2014. Why?
Sun International is one of those companies where we think they've got a natural moat. They've got the hotels, they've got the inside lane in terms of gambling. We've also got to say that gambling is, if you look at consumer spending, it is certainly more on the discretionary side. So I suppose that holds a bit of a risk with South African consumers struggling a bit. But if you look at the valuation of the stock plus the returns that the company has generated, we just feel that this is probably one with a slightly longer term hat on. This is one that we should include in the portfolio. As I say, I think there's a slight bit of cyclicality to the earnings numbers. But although consumers are struggling, I don't think they will necessarily fall out of bed. So we think this particular company is still pretty well positioned to generate decent returns for investors.
Well, we know your deep value friends over regarding capital management like that one too. Invicta, Christo Wiese's industrial play, has caught your eye.
Yes, Alec, that is one of the companies that from a share price performance, they have certainly produced the goods for investors in the past. And it's always a risk when you invest in a company that has done well that you come late to the party. However, having said that, if you look at the rating of the company, it's trading on a price earnings multiple of just over 12 times. They've got a wonderful track record of acquiring businesses with slightly elevated currency, which is normally their own share price, and then they extract value out of those businesses. And in the recent past, they've acquired a business listed in Singapore, used to be listed in Singapore, called Kian An. It is doing similar, or it's selling similar products into the Southeast Asian market. And I think it gives them a very nice footprint in a region where we know the economic growth is still pretty buoyant. They foresee that in the next 5 years that the earnings pattern, they will generate about 50% of their earnings from offshore earnings. So, we just think that the management has got a fantastic track record, and we are still prepared to back them at this particular point in time. And as I said, in terms of its own history, it's slightly elevated from a price earnings multiple, but relative to the other industrial shares, it is certainly not expensive.
Alwyn, I see BHP Billiton, that's a firm favorite in many portfolios, and including yours too.
Yes, I think BHP Billiton plus Kumba, you've also got to look at it from a top-down perspective. What we have seen over the last let's say 18 months, 2 years, that mining shares have generally underperformed significantly. BHP less so than many of the other mining shares. But if you look at the valuation compared to the height of the commodity company's valuation in 2007, or early 2008, you will see that the price to book valuations of mining companies have shrunk considerably. In the case of BHP Billiton, it used to trade at a price to book valuation of more than 5 times, is now trading at a price to book of about 2.5, 2.7 times. So it certainly looks far more interesting from that perspective. Secondly, I think there's also an awareness with many of these mining companies' management teams that they've got to address the asset allocation issue. I think in the past they've been guilty to allocate capital that didn't generate the returns on capital that shareholders expected, and there's a huge awareness with many of these mining companies to address that issue, and I think Billiton is no exception to that. And then lastly, if you just look at the production updates that Billiton produced over the last year or so, I think it would be fair to say that from a production perspective, Billiton has been a superior company, and if commodity prices can hold, I think they should get a benefit of that. And of course also for South African investors, when we look at commodity prices, you've got to look at the rand commodity price, and with the weakness in the rand, Billiton will also serve as a rand hedge. So all in all, I just think that for the new year, Billiton is a must-have in a portfolio.
Alvin, we hope you're right on that one, and your last of the 5 is Imperial. We haven't got time to go into that because I'd really like to get your views on the legacy that the late Graham Mackay, will be leaving. He passed away this morning, former chief executive and chairman of SAB Miller.
Yeah, Alec, when I think about Graham Mackay, I just think about Mr. SAB. I think he has set and established a particular culture, and whenever I see people of the SAB management team, you know, they are extremely loyal people with a firm set of values, people who understand their market, and ultimately, and I think that is very important for me and as a shareholder as well, that they know how to execute. And he stood for those values, and I think he lived it. And my view is that, you know, if you set that example, you know, it's very easy to follow a particular example, and he was certainly, I think, an icon, not only in South Africa, but certainly internationally when you look at captains of industries.